Hello, everyone, and welcome to Geopolitical Trends. I'm your host, Dr. David Walaloo. So good to be with you, as always. The United States dollar's dominance is being challenged on several fronts simultaneously, from countries choosing to either conduct their trade in local currencies to BRICS developing its own currency. And gold is paying attention. So, why is that? And where this is headed is of great importance for you to understand. Everett Millman, Gainesville Coin precious metals expert, said, and I quote, "This de-dollarization trend can directly impact the gold market, especially regarding sentiments." He added, "There is definitely a lot of discourse about the dollar losing its reserve currency status. Where that conversation goes is going to be very important for gold." End of quote. If there is a swing in the public perception of what's happening with the US dollar and the US economy, that will shift the sentiment very quickly. And gold is usually the first asset to react to that. This is why we are noticing not only people and investors for that matter, but also central banks around the world acquiring gold. The gold market continued to trade solidly close to $2,000 an ounce at the time of this recording. After buying a record amount of gold in 2022, central banks are not letting up, with 2023 seeing the strongest start to the year in more than a decade, according to the World Gold Council. World gold reserves increased by about 52 tons in February, rising for the 11th month in a row. In January 2023, central banks bought about 74 tons of gold. Year to year, central banks' net purchases stand at 125 tons. This is the strongest start to a year back to at least 2010, when central banks became net buyers on an annual basis, said the senior analyst Kristen Karpel. The biggest purchaser in February was the People's Bank of China, with 25 tons bought. This was the fourth month increase for China, during which the bank added about 25 tons of gold. Given the recent developments in the gold market, especially with Chinese state-run gold producer Shandong GoldMining, which announced on Friday, last week, May 18th, that its controlling shareholders has discovered an additional 200 tons of gold resource at the Zenlin gold mine in Lanzhou in Shandong province in eastern China. The discovery brings the total cumulative gold reserves of the mine to about 580 tons, making it the country's largest deposit of the precious metal, with an estimated economic value of about 200 billion yuan, or 28.5 billion US dollar. So why is this important for you to understand, you may ask? Well, you must look at it from the perspective of an investor, as the market is switching from selling to buying. That said, looking at the historical data, you will notice the following. 1. In the 1990s and early 2000s, central banks were net sellers of gold. There were several reasons behind the selling, including good macroeconomic conditions at that time and a downward trend in gold prices due to strong economic growth. Gold's safest haven properties were less valuable, and low return made it unattractive as an investment. Number 2, central bank attitude towards gold started changing following the 1997 Asian financial crisis, and later on, between 2007-2008, the global financial crisis. Since 2010, central banks have been net buyers of gold on an annual basis. Number 3, we can't ignore Russia and China, arguably the US's top geopolitical rivals. They have been the largest gold buyers over the last 2 decades. Let me put a disclaimer here. This is an updated video about my recent promotional video that I did about US GoldMining Incorporated, the stock ticker USGO. Let me share with you some key update information about what's going on with this company. In the past 3 weeks, yes, 3 weeks, shares of the USGO are up close to 60%. And it's been one of the best performing Nasdaq listed companies. B, a testament to this is the candidacy of USGO to be included in the Russell 2000 index, to be announced in a matter of a week. And by the way, the Russell 2000 index is a stock market index that tracks the performance of approximately 2,000 small capitalization companies in the US. It is a subset of the broader Russell 3000 index, which represents around 97% of the investable US equity market. And C, USGLDG, which is the parent company, has recently purchased $1.6 million on the open market, raising its ownership stake to 81%. So this potential Russell 2000 inclusion could be a game changer, as the ETF fund will be forced to buy shares, and 8 out of 10 are not even for sale. By the way, ETF stands for the Exchange Traded Funds and are one of the most important and valuable products created for individual investors in recent years. ETFs offer many benefits, and if used wisely, are an excellent vehicle to achieve an investor's investment goals. This is before we even start talking about analysts covering USGO, which there are currently none of since it is just did its IPO. And here is the key information I want to share with you. USGO is offering a one-time 50% of normal rate, given the immense potential regarding its projects. And which project are we talking about? The Whistler project, which contain 9.4 million ounce equivalent resources of gold. At today's enterprise value, that makes their resources quoted at only $15 an ounce, whereas 3 recent buyouts in the region occurred at over $100 an ounce. And CEO Tim Smith was involved as selling a company in 2016 for $130 an ounce when gold spotted was at $1,200. 2. The company is loaded with $19 million in cash and ready to deploy it in drilling. So, what are you waiting for? You can either invest in US GoldMining Incorporated, stock ticker is USGO today, or just let this opportunity slip away, as demand for gold is only going to move forward. Once again, US GoldMining Incorporated, stock ticker USGO. Check it out. And remember, there is always risk in investments and there are no guarantees. Thank you.